Okay guys, so in today's video we are going to do income statement, or you can call it comprehensive statement. Okay, so in today's video guys, we are going to start from the scratch. So I picked a question paper that we are first going to do our GAAP principle, because guys, remember, when you prepare income statement and a balance sheet, you have to follow the rules so that it's gonna be simple for you when you are preparing your income statement. Some of you call it statement of profit or loss. It's still fine. Okay, let's quickly check our question so that we can apply those principles when we prepare our income statement. Okay, so it was containing 50 marks. Okay, choose one word from each of the following statement by choosing the GAAP principle. The reason why we're starting with the GAAP principle, guys, remember I said when you prepare income statement, you have to follow a GAAP principle. Okay, there are some GAAP principles that I want to introduce to you so that it's gonna be easy. All right, we are given number one, going concern, a prudence, historical cost, materiality, business entity, and the matching concept. Okay, 1.1.1, they say that the business expect to make a profit of 80,000, okay, on the sales part of the building, and it will not be entered in the books until the transfer of the land has been concluded. In other words, there is no transaction that is going to be recorded until what? Until the transaction has been made. In other words, for now, there is no any sales that has been conducted. So the principle that apply in this case, guys, is called a prudence. Okay, then the next one, insurance of 2,300 is paid in advance. This one is very, very, very important. Okay, insurance of 2,300 is paid in advance, and this amount is not reflected in the statement of comprehensive income. Okay, you know that when we prepare income statement, guys, the principle said that we must only record, or we must only focus on the transaction of this year. In other words, if there is something that has been paid for next year, don't include it. You must subtract it. Okay, so in other words, guys, this principle is saying that if you record for 11 months, this is not allowed. You must add another one to make it 12. Why? Because this other one, you can't record it on the next year. The principle will never allow you. Every transaction must be for 12 months, whether it has been paid or not. It must be for 12 months, all income and expenses. Okay, so now what will be the answer for this one? Of course, it's a matching principle. Matching principle, guys, is the most important one, because all income that we are going to record here and all expenses, you must apply this principle. Okay, the next one, the business will continue to operate in the future. Of course, this one is a going concern. Okay, in other words, we're assuming that because we make a profit this year, obvious, even next year we're still going to do what? To operate. Interest expense should be disclosed separately in the financial statement. Okay, this one is a materiality. When we say materiality, it's more like we are saying that this is very important. We must see it in a separate way. We don't want to see it included with other item, because it will look like it has been hidden. So it must be separate so that we can see it. All right, that's what this principle is saying. So now the question that we are going to do: prepare the income statement, which is statement of comprehensive income of Clazo Traders for the year ending 29 February 2024. Okay, and is containing 42 marks. Okay, then after that they ask us some theory question, which says provide two possible reasons why the rent income decrease. Of course, if there is no demand, the rent will decrease, or maybe the condition is no longer the same. Okay, however, now we have to start with our income statement. Okay. We've been given the extract from the pre-adjustment trial balance on 29 February 2024, which means that our year is ending 28 February 2024. In other words, our year started last year in 2023 on 1 March, because it must be 12 months until this. It must be 12 months from 1 March 2023. If you count it until 28 February 2024, it's 1 month. Okay. We've been given equipment, accumulated depreciation, loan, trading stock, and so on and so on. Remember, the part that we focus on when we prepare income statement, most part that we take the balances is from nominal account section. Okay, if you check the sales amount it is given, let's quickly start. We have to start by opening a bracket. Why? Because remember, from sales that you have made, it can happen that some customers has returned the goods, so you must subtract what has been returned. If there is something that is not recorded, you must also add it. If we sell but we didn't record, you must add it. Okay, let's start with this amount of 1,248,260. Then we subtract. Debtors allowance simply means that the customer has returned the goods. We must subtract it because we can't count it as a sales while it was returned. Okay, now we have to check at least the transaction number 1. Goods with the cost price of 9,200 were sold on credit to P. Smith. No entry has been made. So we have sold the goods, but this good was not recorded. Okay, what do we do now? Because we sell, we can subtract. It's going to increase our sales. But guys, here the problem is that they give us only 9,200 of cost price. We don't record cost price here. Cost price is like cost of sales. We must convert this 9,200 into what? Into selling price. Remember, on top at the beginning, they give us a markup. They said the following information was taken from the books of Lazo Traders on 29 February 2024, and the business used a markup of 80%. We have to convert this into our sales because this is a cost of sales. We have to say 180 on top. Remember, it's always 100. You just added the markup that you are given. If they give you 50, it's going to be 150. Then you see multiply by 100, and it's going to give you the amount that you are going to add of 16,560. Okay, so we don't have any other transaction related to this, and now it's going to give us 1,261,620. all right, remember guys, if you check here under cost of sales, there is nothing that was given. If there is nothing that was given under cost of sales, this simply means that you must use a markup. You are going to take this total to convert into cost of sales, 1,261,620. Now, because you're converting to cost of sales, you must say 100 on top and 180 on the bottom. You do reverse of what you did here. Okay, then it's gonna give you 700 and 900. all right, remember guys, the one of adjustment, because it's already included here from this amount, you must not reaccount it again. You're gonna double amount. Don't do that. Okay, then now to get a gross profit, sales minus cost of sales, we're gonna get a gross profit of 560 and 720. Okay, that's how we do the first part, which was containing almost 80 marks. That's a lot. Okay, the next one, we're gonna do according to the transition, guys, because we can't go to this part and this part. It's gonna be difficult to edit. Okay, so Roman figure number 2, on 29 February 2024, the fiscal stock count revealed the following. We have a trading stock of 196 and 450, and we also have a packing material used of 7,900. What do? This trading stock, guys, if you compare it with the one at the beginning, you will find that the value of closing is lower, because at the beginning it was 212. This is indicating a deficit because it's more like the value has been lost. The stock has lost a value. So in other words, it's a deficit because the value, if the value of stock goes down, it's indicating deficit. Deficit is an expense. Okay, we're gonna say our opening 196. Opening is not 196, guys. Closing opening is 12,000 minus closing of 196, 450. You must also remember to subtract the stock which was sold using the cost price from the Roman figure number 1. It was 9,200. Why are we subtracting? Because we no longer have this stock. It was sold to customer. We no longer have it. That's why we're subtracting. If the customer return it and it was not recorded, you add back because we receive our stock back. Okay. Then our trading stock deficit will be 6,350. Okay. And now, again, remember we are also given packing material used of 7,900. Okay. So what do we do with this 7,900? Number one, remember if you are given packing material at the beginning and purchase and on hand, you just said opening plus purchase minus closing, then you're gonna get the one that you record under operating expenses. The one that you record under operating expenses is called packing material used. Okay, so which means that the one that has been used is the final amount here, and that's what it is given. In other words, we're not going to calculate anything. The one that is given is the one that we have to record. Packing material used. It's not on hand. You must be careful about the difference between the two. 7,900. Okay. And the next one. A debtor T Naidu, whose account was previously written off, paid 800. Okay, and the bookkeeper incorrectly credited the amount to a bad debts account. So here, what do we do now? A debtor Naidu, whose account was previously written off, paid 800, and the bookkeeper incorrectly credits the amount to a bad debts account. Okay, guys, here we have a little problem. There was error that happened that we need to solve. Instead of recording this amount as a bad debt, it was recorded as a what? The debtor Naidu, whose account was previously written off. The person was actually written off already and has paid 800. When a client paid 800 but was already written off, we call it bad debt recovered. Bad debt recovered, 800. But this amount, guys, yes, we record it as 800 here. It's fine, and we did the correct thing now. But this amount was incorrectly credited on the bad debt. In other words, it was subtracted under bad debts. They recorded it on the credit. Remember, expense is a plus minus. It was credited. Okay. So in other words, now when we can tell what was credited, when we can tell, we debit. So in other words, we have to go to bad debts and add this amount which was subtracted. Okay, so at the beginning, our bad debts amount was 8,800. Now we have to add back 800, which was incorrectly recorded. Then it's gonna give us 9,600. That's how you correct this one. You don't subtract. You must first check if they did mistake by credit or debit. Okay. The next one. Provision for bad debts must be decreased by 500. It must be decreased by 500. So here we have a provision for bad debt of 5,000. They say that this amount must be decreased by 5,000. They didn't give us percentage. Remember, if they give us percentage, we have to perform some working, which we have to say a debtors control minus bad debts from transaction, and we multiply by 2%, and we compare with the one at the beginning of the year. But here, guys, they give us a final amount. Because amount has decreased, it must be a profit. If people that we are doubting that they are not going to pay us, if they become few, which means that it's a good thing to us, which is other income. But if it has increased, if people that we are doubting that they're not going to pay us, they're becoming more, it's an expense. You have to record it as an expense. This one is it has decreased, it will go this side. 5,000 provision for bad debt adjustment. Okay, then there was no need to work on this one, as it was clearly given. Okay, moving to the next one, Roman figure number 5. One employee is omitted in salaries journal for February 2024. Okay, and gross salary, deduction, net salary, UIF, and contribution. Okay, then UIF contribution include the contribution made by employers or contribution form part of salaries and wages. In other words, after we have done with the calculation of the salary, we must also add what? Contribution in the same amount of salaries and wages. Okay, at the beginning, salaries and wages, it was 189,240. Remember, we must add the one which was omitted. The question is, which one to add? Obviously, guys, we add a gross salary, which is not given here. But it's easy because they give us that deduction was 560, which is 7% of the gross. Okay, we must do a reversal method to calculate this one. 560 multiplied by, we are looking for original amount, and we have 7%. If you do this calculation, guys, you are going to get amount of 8,000. That's the amount of gross. If you say 8,000 multiplied by 7%, it will give you 560. Very simple. Okay, then again, remember, we also have to add contribution. Contribution, it was given, there was no need for us to do what? To do any calculation. So which means that we just gonna say plus 160. You don't do 2% of 160. They're just indicating to you that the 2% is a what? Is amount that they calculate. They use 2%. Even if you use 160, guys, to do the reversal method, 160 multiplied by 100 over 2, it's still gonna give you the 8,000. That's what those percentage is showing. It's either you can choose to calculate it using deduction or contribution. You're gonna get the same amount. Okay, you choose the one that you want. Okay, then because we are done here, we must calculate the total. What is the total for salaries and wages? 197,400. Okay, Next one. The next one, insurance include an annual policy of 5,700, 57,840 taken out on 1 June 2023. Let's first check. Insurance, it was 42,000 before anything else. 42,840. Okay, and here they say that annual policy of 57,000. Annual is means that it's 12 months. Okay, they say it was taken out on 1 June 2023. Okay, now here we have a problem. Remember, our year is ending February 2024, but if you count from June up to 12 months, you will find that this will end next year May. Okay, if we allow this, it's going to be against the principle that we did at the beginning of matching concept, because matching concept, it says that you must record until this day. If it's ending next year May, it will have March, April, May. These 3 months is out of our reporting period. We must remove them. We have a 3 months that need to be removed. We must say 57,840 multiplied by March, April, May. That need to be removed, which is going to give us how much? Let's calculate. It's going to give us the amount that we must subtract of 14,160. Okay, when you subtract, it's going to give you 28,650. Very simple. That's how you perform this one. All right, I hope you are learning up to so far, guys. Please make sure that you subscribe to this new channel so that I'm gonna do part 2 for the income statement with the different transaction. The more we have many people who subscribe, the more we are going to do another part 2 and part 3. Okay, so do yourself a favor so that you can also benefit. Okay, moving to the next one. The loan statement received from the Bank reflects the closing balance of 630 and 800. Okay, so how are we going to deal with this one? The loan one is the one that is going to help us to calculate interest. At the beginning, guys, our loan was 611,300. We have to compare with the balance at the end and see how much was it. At the beginning, it was a little bit lower, and now it has increased to 680, which means that they charge us interest because we didn't pay 800. Okay, if you do that, you're going to get interest that is increase of 19,500. Okay, 19,500. It must have a bracket, guys. It must have a bracket to indicate that it's an expense. Okay, next one. The rent has been received for a period of 1 March 2023 to 31 December 2023. So in other words, they received the rent for only 10 months. If you count March, April, May, June, July, August, September, October, November, December, it's 10 months. Are we allowed to record 10 months under income statement? No, we have to record 12. In other words, we must add the shortage of 2 months. But they say that you have to take note. You have to take note that the rent has decreased by 400 per month from November. In other words, November and December, there is a decrease of rent. In other words, this is what we have to do. Because it's a decrease, it's not increase, we must add back decrease so that the rent amount will be on the same level, so that when we divide, we're gonna get a amount before rent decrease. Okay, the rent, it was 78,200. Okay, let's do calculation here. 78,200. We have to add, remember it's November and December. 400 plus 400 is 800. We must add back 800, which is going to give us 79,000. Divide by 10 months. It's gonna give you 7,900 per month. This 7,900 per month, guys, is before decrease. You must subtract what? 400, so that you can get 7,500. 7,500 is for 1 month. You must multiply it by 2, because we must add 2 months because they paid for 10 months. This 1 times 2 is gonna give you 15,000. That's how you work out this rent. Rent has a lot of challenges, guys. I'm gonna bring other examples on this channel, so you need to make sure that you do what? You also work out the different calculation and the different transactions, so that you can practice this kind of challenges. I know the rent is mostly challenging because the other one, they will say that it has decreased or increased by percentage. You must use other formula, not this one. We're gonna do it on part 2. Okay, this one will give you 93,200. Okay, here we can get a total which is going to give us 99,000. Okay, gross profit plus other income will give you gross operating income, or gross income, I mean 659,720. Okay, and the operating expenses, we still have a telephone. Okay, sundry expense. Okay, and let me do this. Okay, this one must not supposed to be here. Sundry expense, it was given, guys, is this one. Telephone is this one, and packing material, we have it. Okay, we left with bank charges and interest. Okay, let me write this in a straight format. 86,700 and the 23,650. Okay, otherwise what was not calculated correctly, you have to recalculate on your own, guys. Don't tell us on the comment section, because video will never be repeated. Okay, because you can see there is a lot of calculation. I can't verify everything. You have to do it as a student. All right, depreciation, I think we have it on our transaction, on our trial balance, I mean, is 85,600. It was given, there was no need to calculate anything. Bank charges, the bank statement reveal the following item that have not been recorded in the relevant cash journal. Transaction fee and EFT, you just add them together, they will give you bank charges. 340 plus 210. It is gonna give you it's gonna give you amount of how much? 550. Okay, if you add all expenses, you are likely to get this one, 446,130. If you don't get this one, just admit whatever that you get, as long as you are applying the principle correctly. All right, then operating profit, this one minus this one, it will give you 213,590. Okay, guys, we don't have any other transaction now, but we can get this. Remember, the profit for the year was given. which means that we must get profit before interest expense as a balancing figure. If you take this one, when we go up, we change the sign. If you take this one plus this one, we're gonna get 229,590. Okay, and interest income is a difference between these two, which if you subtract these two, you have to subtract because this one is positive. Okay, when you go up or when you do reverse, guys, you change the sign. This one is a balancing figure. That's how you conduct income statement, guys. I hope you enjoy. At least you learn something that you didn't know. So we're going to bring part 2. So just make sure that you subscribe to this new channel that I just have created, so that those who are going to university level, this will be your channel. Also, if you are going to university level and you are going to do accounting related, that's where you're going to get your videos, because on the other one, accounting solution SA, we just record the one for high school. So for this one, we're just gonna mix it, but it's going to explore more videos that are related to higher institution like college and university. I'm gonna see you on the next one. Part 2 is coming.